Good morning, viewers. Welcome to the Joe Sammut live session today on Monday, April the 27th. It's exactly 10 a.m. We have a lot of exciting things to talk to you about today. One of the things that we get asked all the time is, are there mortgage opportunities for senior citizens, for elderly people? And we do have a product that is most ideal for something like this, and it's called the reverse mortgage. One of the products that we carry is specifically called the chip mortgage. And we have a special guest with us today, Sean Russel, who is a senior business development manager for Home Equity Bank, which is more specifically the chip product, which is a version of the reverse mortgage product that is available in the marketplace today. So I have Sean Russel here today, who's going to hopefully field some questions and perhaps come up with some questions and answers that perhaps myself or any of the listeners haven't thought of up to this point. So I'm going to bring Sean in right now. And Sean is, we're trying this new technology today, so bear with us, but Sean should be on the air with me momentarily. All right, Sean, welcome. Your microphone's off. What? Sorry, Sean, you're welcome.
Yes, I appreciate the intro, Joe. And I mean, I've had the pleasure of working with Home Equity Bank now for 5 years. And I can tell you in that time, we've been able to help a large amount of Canadian retirees. And one of the things that we often hear when I work with somebody like yourself in the brokerage community is clients contacting either their broker relationship or us afterwards and saying things on the line of, I wish I had done this sooner. So definitely there's a need there, not just now, but there's a consistent need for this product. And it's been a pleasure working with you and other folks in the community.
Well, thank you. That's very much the sentiment that we hear as well. There are a lot of individuals that are taking their time to make the decision to go with a reverse mortgage. And then when they finally do, they find it to be quite relieving and wish they had have done it sooner.
Yes.
For those viewers that don't quite know what a reverse mortgage is, we're going to get to more specific questions and answers in a second, but it's essentially the opportunity to allow somebody to remain in their home, remain in place, remain accustomed or living the lifestyle that they've grown accustomed to within their very own home that has cherished memories and a lot of history, and it eliminates their ability or their need to have to perhaps make a move. So the chip mortgage, again, specifically has really worked quite well for a lot of our clients. And again, Sean, thank you for being here. So I want to start with a couple of questions. And as I mentioned, these questions may or may not be top of mind for a lot of the viewers, but perhaps if it doesn't, or doesn't work with you specifically, you might very well know somebody in your family, relatives, friends that could very well benefit by this. So what is the ideal age group for a reverse mortgage, Sean? What are you finding is the age group that most benefits by this product?
Sure, thanks, Joe. The minimum age, let's start the minimum age. An individual that's looking at a reverse mortgage solution needs to be minimum 55 years of age. So that's our starting point. Now, bear in mind that we don't do a whole lot of reverse mortgages for individuals that are as young as 55. Sort of our sweet spot, if you will, is 65 years of age and older. And that's really where we're going to get the significant amounts of loan to value to make this sort of thing work for your viewers. Now, I understand that some of the viewers may indeed, as you mentioned, be younger than 55, but that's okay because they may indeed know a family member, a friend, a colleague that is over the age of 55 that might want to speak to you, Joe, to talk about the solution.
Do you find often that some people will come to you on a recommendation from a family member or from a younger person, perhaps?
Yes, it's happening more and more frequently, actually. Okay. I do find that, and rightfully so, that when an individual is looking to take on a reverse mortgage, it has become a family decision. And therefore, the kids are involved from the early stages, and perhaps even other family members. So yes, often we do get a recommendation from a family member.
Okay, that's great to hear. Fantastic. How much loan to value can a recipient of a chip mortgage get on their home? So loan to value basically being, and I know you know what this is, but again, for our viewers, so the loan amount compared to or in a relationship to the value of your home. What are you seeing as the most or the highest loan to value an individual can get from this product?
We cap out, Joe, at 55% loan to value. Now, that's not to say that a client could come to you, Joe, and say, you know, I'm interested in that chip reverse mortgage, and I'm looking for that 55%. There really are three main factors involved with determining an individual's loan to value. So one, we're looking at their age, very important. Two, we're looking at the location of their property. And three, we're looking at the type of property.
Okay.
So I'll explain that a little further for you. The closer a property is to the GTA, Greater Toronto Area, the higher loan to value you're going to get. The property, if it is a fully detached home, a single family dwelling, that's going to warrant more loan to value than, say, a condominium would. And then, of course, the older that you are, the more loan to value you're going to receive as well. So it's those three factors that determine the amount up to a cap of 55% that the client can receive.
Okay, thank you, Sean. Just if I can at this point, I want to throw in a couple of situations that
Sure.
you get into with individual clients, and I won't mention any names, but we have one individual who is 93 years old, who when I originally made contact with her, or she made contact with me, she was looking for financing options available to her to take equity out of her home at that time to care for an elderly or an ailing husband who was a little bit her senior. And she was adamant that the chip mortgage was not going to be the product for her. She didn't like the concept. She was afraid of equity being eaten up by this product on her home, mm-hmm. and not being able to leave anything for her heirs or her beneficiaries later on. After many discussion, or after much discussion, and I was able to show some numbers, she was a little more receptive to receiving the chip product. So that was, again, 3 years ago, and she wishes she had have done the chip a lot sooner. It would have taken a lot of strain off of her finances going through that process of caring for her, again, ailing husband. But again, very, very negative to the idea at the beginning, simply because of some of the misconceptions she's heard in the media, through public, friends, family, whatever the case is. But once she was able to get into that product, it basically changed her life. It gave her the ability to stay in place, still very, very healthy, still very, very sound-minded, and she was able to, again, stay where she was accustomed to living. So from that standpoint, it was a wonderful opportunity for her. Now, what are some of the myths? I just touched on some of the things she had heard from public and through the media, but what are some of the myths that you could perhaps help squash today,
Sure.
as far as some of the reasons why people don't want to hear about chip mortgages or reverse mortgages?
And this is a great one, so thank you, Joe. And it's something that I come across every day in my travels in speaking about the chip reverse mortgage. There's not many, but there's three main ones, and I want to touch on all three of them because I do think they're all very important, and probably many of your viewers might be thinking the same thing. So let me demystify those myths, if you will. The first one is the bank owns the home. So the bank being, in this case, Home Equity Bank. Now, like any traditional mortgage through TD, RBC, Scotia, we are simply a charge on title, and therefore we do not own the home. Okay. The client, your clients, if they took a reverse mortgage, they can sell their property at any time, and they also have the option of our product is a lifetime product. They can stay in the product, age in place until they eventually pass away, and then it goes through to the estate. So the myth being that we own the home is just that. The fact of the matter is the client owns the home just like a traditional mortgage. Okay. So that's number one. Number two is that the reverse mortgage will owe more than the value of the home. So the reverse mortgage will be larger than the value of the home at some point. And I can tell you this myth, that doesn't happen. The main reason that doesn't happen is that we are so conservative with the loan to value that we offer your clients. I mentioned earlier, one of your questions was, what's the maximum loan to value? And the maximum is 55%. Now, bear in mind, to get that 55%, you need to be over the age of 80. Okay. And therefore, based on our lower loan to values and the time that a person will end up staying with a reverse mortgage, we never run into a situation where there's negative equity. Now, in the unlikely event that did occur, for example, we go back to the 2007 housing crisis in the US, very unfortunate time. If something like that were to happen in Canada, I don't think it will, but if it ever did, and there was negative equity, we as a company would take any loss on that. The client will never owe more than the value of that property. So they're not going to be in any negative equity.
That's a very good point, Sean.
Mm-hmm.
From what I hear and what I've researched is that in the U.S., it's significantly different than how our operations take place in Canada. We don't allow, or I don't know if you're legislated not to allow the product to go into a negative equity position, but as you had mentioned, you're not going to find your clients in a position whereby they are owing more money at the end of the day than perhaps the house is worth. So that's very good to know.
Yes, and we are very different from the U.S. I won't go into all the differences at this point in time, but things that clients might research and learn about the U.S. market space might scare them, but it's very different here. So I know you're always available, Joe, and you can always come to me as well with any questions on that. I'm happy to address that. So that was myth number 2. I'll just touch on the third one, which is reverse mortgages are a solution of last resort. That is definitely a myth, and I can tell you that we are seeing so many new ways and reasons why people are taking out reverse mortgages. Many people think that it's just, I've got no other solution, other option. I need to go and talk to Joe to help me out with a reverse mortgage. That's not the case. People are being extremely proactive with this. And I'll give you some examples. Something we like to call a living inheritance. We have many clients right now that are taking a reverse mortgage to gift their kids or grandkids or loved ones money now while they're alive. And the biggest portion of this is parents and or grandparents taking a reverse mortgage to help their kids or grandkids with a down payment on their home. You and I both know how difficult it is for somebody in their late 20s looking to buy their first home to find a down payment for that. And so reverse mortgages are becoming a way through a living inheritance to fund that for the younger generation.
That's wonderful.
The other reason you might look at this proactively is, and I've worked on a number of these, Joe, is clients coming to us saying, we would like the dignity of aging in place in our home. So instead of being forced to move into a full-time care facility, we'd like to take a reverse mortgage, not only to retrofit our house with the equipment needed to age in our home and get care in our home, but maybe bring in some full-time or part-time nursing help into the property. And this is becoming super important right now. It's been a big trend for us in the last 2 or 3 years. The last one I'll mention is just some of the standard ones. Debt repayments, very popular with our clientele, and then renovations of the home. So it might not be retrofitting the home for care purposes, but simply just aesthetic renovations is something clients tend to use a reverse mortgage for a lot.
Thank you, Sean. Interesting point you just made prior to your last, and that is, in this day and age of COVID, and not to fearmonger here, but this is so very important because this product could allow, and in any case that we've been involved in with our clients, it has, for the most part, has been for debt consolidation, for renovation, or to allow somebody to age in place.
Correct.
Or, as the case I had mentioned earlier, caring for an aging partner. But if somebody were able to stay and age in place and have caregivers come into the home, it just would give that peace of mind, I'm sure, to a lot of people. Gives them the ability to stay, again, where they've been accustomed and get through their golden years with pride and dignity and allow.
You're absolutely right.
So that's wonderful. Thank you so much. Question: what if you have a couple that are applying for this product and there is a significant variance in age? So I know you've mentioned the minimum age is 55. The most beneficial age is 65 and older. What if you have somebody that is 78 and the partner is 68? Explain, please, to the audience how the dollar amount is selected, and I'm sure it's actuarial and things of that nature, but what age do they cater to in a variance like that? So please explain that if you can.
Great, thank you, Joe. And this is a very common one. Very rarely do we have an application where husband and wife are the exact age. So typically there is an age variance, sometimes small, sometimes large. What we do with that is we will blend the ages. So if we have a 75-year-old and a 65-year-old, we're going to meet somewhere in the middle. It is actuarial. It's close to an even blend. So a 75 and a 65, we'll probably get it right around the age of 70 for our loan to value calculations.
Okay.
Bear in mind, we do need both spouses over the age of 55. So I've had a number of scenarios where clients come to me and said, Sean, I'm 72. I've remarried. My spouse is 54. Can we do the reverse mortgage? The answer is no, we cannot. It is a hard stop until both spouses are over the age of 55.
On that note, though, can you take the 54-year-old spouse off title?
Great question. I get it often, and the answer is a hard no. We cannot remove a spouse from title. And simply put, Joe, I won't get into the details or the weeds on it. Spousal law trumps anything that we could handle. So we don't want to be in a situation where we've removed somebody from title and then we run into a problem down the road. So we cannot remove a spouse from title. And in fact, I'll take that a step further. If one of the spouses is not on title, we can still do the deal, but we need the non-titled spouse on our application.
Fair enough. And having them on the application, does that then affect the average age as it would have if they were on title?
Correct. It would. We would then blend the ages. Yes.
Okay. All right. Thanks so much, Sean. What is the cost for initiating a chip mortgage? Again, that's another myth I think that needs to be clarified today, because you as a company, and I can't speak for the other reverse mortgage providers in the marketplace, but you as a company do not allow any additional fees to be charged by a broker or by an originator to the client. You are paying for the service of our professional services to come into the mix and introduce our clients to you. But what is the cost to the client outside of, again, you not allowing any additional fees to be charged?
Yeah, those are great points, Joe. And I'll start with your last comment before I get into the actual cost. That is correct. We do not allow the brokerage community to charge a fee on this product. And that's really an important one. Other providers do allow that. And we want to keep the cost to a minimum for our clientele. Now, out of our own dollars, we do pay you as the broker for a reverse mortgage. But that's where it ends. You cannot charge more on top of that. Okay. Now, the charge to your clients are really, really simple. There's actually three of them. The first one is an appraisal. So with any mortgage or loan product, you're going to need an appraisal. That's a fact of life. So we're no different there. The client's going to pay out of pocket for that appraisal. Now, it's important to note that of our three fees, the appraisal is the only out-of-pocket cost to the client. What I mean by that is the other two costs that I'm going to explain are actually coming out of the reverse mortgage. Okay. So it's not coming out of the client's pocket.
All right.
So the second fee is called closing costs, which are standard to any lending product. It's our cost as a company. It's our legal fees to prepare the final documentation, so on and so forth. On a standard chip reverse mortgage, that flat fee is $1,795. And again, that's not coming out of pocket. That's going to be coming out of the reverse mortgage balance or funds. The last fee is called ILA. That's just a fancy acronym for independent legal advice. All of our clients, all of your clients, Joe, need to end the process at a lawyer's office for obvious reasons.
Yes.
This is a very, anytime you do a mortgage, it's a very extensive undertaking. It's an important undertaking, and we want the client to be represented fairly and appropriately. The cost of that ILA is typically on a standard file, $500 to $700. Again, coming out of the reverse mortgage, not out of pocket for the client.
Wonderful. And I think it's very important on the last fee there for the ILA. Very important for individuals or an individual to get the professional opinion of legal counsel to just perhaps give them that perspective on things as they go through this process as well. So it's, again, a wonderful product, wonderful service, wonderful process. But to get that ILA at the or throughout the process is most certainly ideal. I have somebody writing in and asking about interest rates. Now, that is another thing that I believe perhaps comes up it does come up in all the conversations I have with people about the product. And interest rates are an interesting element or component to the chip mortgage, the reverse mortgage, simply because there is a service, there is a function to allow an individual not to have to make mortgage payments throughout the life of their mortgage as they're, again, aging in place. And there's a cost for that, and that cost is transmitted, I'm sure, through the interest rates. So please explain the variance or the delta between perhaps your rate and a bank mortgage rate, and the difference, the significant difference between when one making payments and one not. So of course, we can discuss that a little bit.
Great, and thank you very much for the person that wrote in on that. That's an important topic of conversation, and I could spend a lot of time on this. So I'm going to try to summarize it the best I can for you. The first thing I will say is that generally speaking, with our files, interest rate does not really come into play too often. People that are looking at a reverse mortgage understand that the rates are going to be higher than a traditional mortgage. So, for example, we're not competing with the banks on their best rates. That's just not our space. Right. So we'll never be the 2.9, 3.0, the 2.7 interest rate. As of today, I'm going to give you the range of our rates. As of today, we are as low as 4.99, and we do go as high as 6.79. Now, within that big range, there's 3 different product types in there, which I'm not going to get into the weeds on today. And it depends on which one you take. So the rates do range 4.99 to 6.79. And again, as you mentioned, Joe, we are a no payment option. So the clients aren't making any payments. So those dollars are accumulating, and that's why it's called a reverse mortgage, at the rate that the client chooses. There are 5 different interest rate terms that we offer: variable, 6-month, 1-year fixed, 3-year fixed, and 5-year fixed.
Okay, wonderful. Thank you. What about penalties to break a chip mortgage? Mm-hmm. A client is in the process or in the middle of a chip, and one of the 3 components happens whereby they can get out of the chip.
Yes.
Please speak to what happens if they choose to pay out the chip mortgage. Just they won a lottery and wanted to pay it out.
Sure.
Second is what happens if they are admitted to some sort of a nursing home or retirement home.
Okay.
And the third, the unfortunate of all, would be the death of an individual associated with getting out of a chip mortgage.
No, that's a great one. And people are often forward thinking, and as you should be thinking about those situations. And there are 3 trigger points to somebody paying us back. And before I answer your question about the actual penalties themselves, I'll explain those 3 trigger points. As I mentioned earlier, we are just a charge on title. So this is the client's home, and they can choose to sell their property at any single time they want and pay us back. So that's trigger point 1. Client decides to sell their property. Trigger point number 2 is, let's take, for example, and I've had numerous cases of this or examples of this. We have a widow that takes a reverse mortgage, and a few years into the reverse mortgage, she falls ill and needs to go into a full-time care facility, and therefore is going to sell her existing home and live in the full-time care facility. That's trigger point number 2. And trigger point number 3 is, which is the vast majority of our clients, Joe, where they will age in place. So the clients will age in place until they eventually pass away, and then the estate would sell the property and pay us back. So let me explain how the penalties work in those scenarios. In year 1, it's a 5% penalty to pay us back. And by the way, the penalties are no different than any traditional mortgage. If you pay back your existing traditional mortgage to TD or RBC or Scotia, there's going to be prepayment penalties.
Correct.
So with us in year 1, it's 5%. In year 2, it's 4%. Year 3, it is 3%. And after the 3rd year, it's 3 months interest. So what I always recommend to the broker world, you know this, Joe, we've spoken many, many times, and I recommend this to any clients I'm speaking with, is if you know you're going to sell your house in 24 months, a reverse mortgage may not be a good choice for you. And I'm okay saying that. It just might not be a good option because that's a pretty hefty penalty. But if you're pretty certain or 100% certain that you're not going to be selling your house anytime in the first 2 or 3 years of reverse mortgage, you have nothing to worry about with penalties. The last thing I'll mention on the penalty is that in the first scenario I presented, if you sell your home, you're going to pay 100% of that penalty. In the second scenario, where the widow, in this case, went to a full-time care facility, we would pay 50% of the penalty. And the third scenario, where the client ages in place, the estate will pay 0. No penalties are ever transferred to the estate. So if you age in place with our product,
okay, that's fantastic, and that is precisely why a suitability discussion needs to be had, not only at the initial stages of somebody looking into the chip, but also right through to the ILA, the independent legal advice.
Yes,
making sure that individuals understand not just the benefit of it, but also what the penalties might be on the back, if there are any. I have a question that just came through, and it's quite an interesting one as well. Is the mortgage possible if one of the partners is deemed mentally incompetent?
That is a very important question, and thank you for that. We, as a company, are working with people that are over the age of 55. That's our clientele. That's our demographic. And as I mentioned earlier, it's typically our average age, by the way, is 72 years of age. So nationally across Canada, our average age client on a reverse mortgage is 72. So that being said, we work with powers of attorney all of the time. And I would tell you this, approximately 24% of our files across Canada have a power of attorney attached to it. And so the answer to that question is yes, we can help somebody in that situation so long as there is a valid power of attorney in place.
Okay.
And then we can move forward and help with that deal.
Oh, that's wonderful. Good, good. I can't think of, oh, actually, sorry, one more. Suppose my mother ages in place and I inherit her condo and decide to move in. What is the timeline? And this is something we've talked about in the past. What is the timeline upon somebody's passing, or in this particular case, the individual is still aging in place and a younger child decides to move in, or
Yes.
has the option of moving in to perhaps give care or take care of that elderly parent? What repercussions are there, or what steps should they take to make sure that they do not impact the reverse mortgage that was in place prior?
Okay, that's an interesting scenario. I've worked on a number of these scenarios, and so the adult child moving into the property to help with a parent that needs some care, not an issue at all, has no bearing whatsoever on that. Now, if a individual had a reverse mortgage, Joe, and they aged in place, they passed away, went to the estate, and then the kid said, you know, I actually want to stay and take mom's condo, and I want to live in there. That's okay. As a company, Joe, we're not concerned with how we get paid.
Okay.
Just like any lender, we just are concerned with getting paid. And so therefore, the estate in that case could say to the daughter, by all means, you can take over the house. We just need to pay back Home Equity Bank. And so what people often do in that scenario is they go and take a traditional mortgage themselves. So the daughter would take a traditional mortgage at, say, TD, Scotia, RBC, and they would then pay us back whatever balance is owing. And then now they own the condo, they have a mortgage on it, and they move on from there.
And how long does a family have to settle the estate of
yes,
since passed?
We give a standard 6 to 8 months, Joe. Most of our files will be taken care of and paid out and sorted through in that time period with no issue whatsoever. Now, if you had a property in a remote area that was taking some extra time to sell after the client passed away, we will most certainly work with the estate and the family to help with that. So it's not as if after 8 months is through, we're putting tape on the house saying, you know, we're foreclosed. No, we're going to help the family get through and pay us back. And it always works out.
Okay, wonderful. I thought of another question, and I have another one coming through, but actually I'll ask this one first. Can a chip be arranged on a secondary or seasonal property? We've just gone through that ourselves on an individual. So perhaps you can discuss that.
Oh, these are some great questions you have coming through, and it's taking us into lots of areas that are really helpful. So the way the question came in, the short answer is no, but let me explain. We can use a secondary property, and we could blanket that property to help with the reverse mortgage, and I'll explain. The reverse mortgage must always be on the principal residence. However, if there's not enough loan to value on the principal residence, we can then blanket or bring into the deal a secondary property. And this is very, very helpful in getting the dollars that a client needs if they have multiple properties.
We just went through the exact same case where we have an individual who had the chip mortgage on her principal residence, needed more money for various reasons, and we then were blanketing her cottage property. So yeah, very, very good question. Thank you. Another question that I get asked is partners, they're on the chip mortgage together, and one passes. Is the surviving partner forced to then sell the house, or does the chip mortgage continue on as it was originally?
Oh, that's a great one. And the answer to that is it carries on. The reverse mortgage carries on. So we are definitely not forcing the surviving spouse out of the property. Absolutely not. So in fact, when one of the spouses does pass away, In regards to our reverse mortgage, nothing happens. We don't, I mean, the client could let us know if they wanted to that their spouse, husband, or wife passed away, but really they don't have to. The surviving spouse will stay in the property as is until they decide to sell or until they age in place, if that's their choice.
Okay, thank you. It's so interesting we're doing this session today. And I thank you for coming on, because these are nagging questions that a lot of our viewers today, or family of some of our viewers today, have. We have, as a brokerage operation, come across every, I don't even know if it's every imaginable situation, but we have come across questions that are just astounding. There are individuals that are elderly and in so much debt, but they have so much equity built up in their home. And one of the things that I've always told my clients is, when you get to the point where your house is paid off, you can't eat your home. You can't eat. You can't survive based on a house that's paid off. So this gives people the opportunity to access the equity in their home. And granted, the interest rates are higher. There's no doubt about it. And I'm glad we addressed that. There are restrictions on the, I wouldn't say restrictions, but there are penalties on the payout of a mortgage, of a chip mortgage, but there are penalties to pay out on any mortgage, whether it be a bank mortgage or a credit union. There are always going to be costs to get out of that mortgage. So from that standpoint, a lot of the misconceptions I believe that the public have pertaining to a reverse mortgage needs to be addressed, because there are some elderly people that are sitting not knowing where they can turn. So how can they get in touch? How can people initiate the chip mortgage discussion? What is the best route for them to start with? Maybe you can.
That's a wonderful question. And for those that are listening, and those that might listen later on the recording of this, I would say that you've already sort of done the first step, and that is you have a relationship with you, Joe. And I can attest to this for those that are listening. I've worked with Joe for 5 years. I've known Joe for 5 years. And the professionalism and the expertise that he offers is second to none. Beyond that, he's an amazing human being. So my suggestion to those listening is get in touch with Joe. Don't hesitate, because that's where you're going to get the most valid information. And if he doesn't know, he'll speak to me to get the specifics on the reverse mortgage. The worst thing you can do is take the advice of a neighbor that might not know our product, or go online and find all sorts of rabbit holes that you're going down into areas that don't even pertain to us. So please, just get in touch with Joe, phone or email, and I know he can help you with this.
Now, are you saying those nice things because I'm entering the entry-level age of the mortgage and getting to that 55 range?
It's funny you say that. I'm just around the corner of that myself, Joe. So I know the need for this, but no, I'm saying those things because it's true, and I know the people on the phone they're listening because of that. So that's where you're going to want to get your information is through Joe and team, because they're great.
Thanks so much, Sean. At this point, everybody, I'm going to perhaps again thank you, Sean, for
my pleasure.
Session, taking the time out of your busy day. You said earlier that in your travels, the only traveling we're doing is from the kitchen to the dining room nowadays. So
I know, so different.
Communication is so very, very important, and I'm so glad that you were you are our first guest. This is our second Joe Sammut live session. It's going to be held every Monday, 10 a.m., and we're going to have different guests on from time to time, or we're going to talk about different things going on in the mortgage world. So again, I thank you so much.
My pleasure, Joe. Love it.
It's been wonderful. So anybody that's watching, viewing, that could perhaps benefit by a reverse mortgage product, please reach out to us. All of our contact information will be provided. It's something that I would encourage you not to bury your head in the sand about. Don't think it's all going to go away. We're working on cases all the time where individuals wish they had have done it sooner, but they tried doing it on their own because they didn't want the stigma of a reverse mortgage. There is no stigma. It is helping people get to the point where they are surviving quite nicely. So from that standpoint, I would encourage you. I have one other question that just came through.
Sure.
Okay, this is a good one too. And you know what? I want to welcome this question, if you don't mind, simply because there are questions out there that need to be answered.
Yes.
No point in putting this off. So this question just came through. What happens when one reaches the maximum amount of the chip mortgage and owner doesn't want to move? That is a fantastic question, because again, I think the stigma or the thought out there was, oh my God, I've borrowed as much as I can. Now they're going to make me move out of my home. Please explain.
Yeah, that's a wonderful question. It is definitely a myth that's out there. I can assure you this, and it's right in our legal contract that the clients sign off when they're at ILA. I can assure you this: we will never force a client to move from their home. We will never foreclose on the client's home. There are a couple of very, very basic things that we ask of our clients that they need to do with a reverse mortgage. One of them is to keep your property taxes up to date and current. That's 99% of the population, so no worries there. Number two, a very easy one, you need to maintain your home insurance. So long as you do those two things and maintain the I don't know what you want to call it, the maintenance of your property, so you keep it up and current and nice. You do those things, there's no way we're ever forcing somebody out of their home. Now, if we offered a person 50% loan to value, let's take $1 million home and their reverse mortgage was $500,000. Even as they're aging and the balance is accumulating, again, going back to that earlier talk that we had, because our loan to value is so conservative, very rarely, if ever, do we get somebody that's getting close to the reverse mortgage hitting the value of their home. There's always going to be some room there. And again, going back to that comment we made about the US, should a catastrophe happen in Canada with financial housing prices crashing, which I don't think we're going to ever get there. If that ever did happen, we as a company would take any losses incurred if the reverse mortgage was worth more than the home. So the clients can rest assured that there's no issues from us removing somebody from their home ever.
All right, thank you. One thing, just to expand on that, the three factors, the three factors that you had mentioned at the beginning of our discussion that are a function of the reverse mortgage is age, property value, and marketability of the property, essentially. So one situation that I've run into, as you've been involved in, Sean, is I've had an individual who was one of my first CHIP clients 5 years ago who has come back to the well times, because as this individual has gotten older, the value of the property has gone up. They're entitled to more money through the calculation of the CHIP mortgage. So from that standpoint, it's very important to know. And I'm getting a lot of comments just thanking us for sharing this information, because you have no idea how many people are out there that are not hearing this, or that are wondering what to do. So to all of you viewers, and for those of you that are going to be seeing this video going forward, this information is invaluable. We have to get it out there. So again, it's our pleasure to bring this information to you. It is our pleasure, my pleasure, to have you on, Sean, and thank you. And I think we're going to wrap it up today. You've heard about how it works, how you can get it. Reach out to me, reach out to any of my staff, and we'd be happy to provide you with information. Even if you're just inquiring, if you just want to know something, let us know. So on that note, thank you so much. And it's now 10:37, April the 27th. I'm going to sign off, and much appreciated.
Thank you, Joe. Thank you, listeners. Take care, everybody.
Be well, everybody.
Bye now.
Stay safe. Thank you.